Hey everyone, it's Zach with Palantir Research. Palantir's $25 price target remains the same and is reaffirmed by Dan Ives at Wedbush that they have a positive outlook for Palantir stock. So what does this mean though, and what's the bigger lesson for investors? So first, the news itself isn't much, but the meaning of it reveals itself on the timing of it because this happens right after AIPCon, which happened last week. So if, for example, there was a non-statement or radio silence, it's not necessarily a bad thing or a weakening in their previous rating and price target, but it could have signaled that AIPCon didn't really show much or strengthen their outlook on Palantir. So being transparent and explicit with it, given the new information, of course, that is available to investors, they decided to let everyone know that they are sticking to what they said earlier in the year when it kind of took the stock by storm when this $25 price target took place and that buy rating came out. So if you all remember, that was on a Friday and the price flew up pretty fast that day. Now, I think the bigger lesson for retail investors isn't the news itself, but rather how you should treat any of your investments over time when looking at it. Investing doesn't stop at just the buying and selling, but rather the part of holding, and that's probably the hardest part. And one of the biggest factors in holding is risk. We won't go over personal forms like allocation or your financial situation, but rather on the company of the stock you own. So in Palantir's case, what has happened to de-risk the profile? Well, as an example, and this will vary on the time frame too that you look at it and the price, of course, that you're seeing at it. The price of Palantir has remained relatively constant, or at least within a range the past few months at this point. Or if you were an investor back in 2022, the same could be said when it was under $10. But to pay attention is what happened to the underlying business over the quote-unquote stagnant times. So for me, the four major de-risking events are as follows. First is the continued GAAP profitability. I personally don't care for GAAP profitability in comparison to like revenue or customer growth, of course, but I understand for their reputation and being a trusted provider of software that they will be around for these customers in the future, so it may actually be a factor in closing deals. But this overall de-risks the stock as they demonstrate their ability to stay GAAP profitable, and this is also without any step-up basis gains that we saw for their first quarter of GAAP profitability. I know a lot of people pointed that out there. I know that it was for the revaluation of their Japanese arm there, but either way, they don't have to play that game now. Second is their authorization of buybacks. So now as a statement to investors, it shows they are willing to take this action if the right criteria are met. We don't know exactly what that is, but at least it allows a mechanism in the future to counteract some of the stock-based compensation that dilutes shareholders. So the overall de-risking through, in my opinion from this, is the flexibility, which I value as a shareholder, and flexibility also segues to the next reason as well. So their cash pile continues to grow. Positive operating cash flow indicates a business ability to survive without debt and even without their cash pile to survive. As their cash continues to grow without taking out any debt or share offerings, although the big caveat is stock-based compensation giving them that crutch to do this. But either way, this allows Palantir flexibility to take risks like AIP, giving it away for free to gain market share quickly. If they were in a more dire financial position, this would basically not happen or be impossible, or it would be just scrutinized much more harshly by the market because it's not going to be fitting well for their financial situation. And then the most important de-risking event, I think, to me personally, is AIPCon 2. So we saw clients continue to expand and advance their usage of the AIP product, as well as the growth in customers and trials that they all wanted to point out there. So they also showed client demonstrations that clearly exemplify the mechanisms of their product for AIP and of course their other products that can create value for customers at many different angles, of course, educating the market on how and why they should get Palantir instead of leaving it up to their imagination. Honestly, a lot of companies operate this way. Just tell me what to do rather than trying to figure out themselves. And then as well as for their bootcamp for a 5-day minimum viable product, that makes it so much easier in hand-holding for these customers and may actually attract much more because they know there's an easy way to get started. So as an investor, this demonstrates to me progress and less risk in the execution of AIP, as well as more transparency so we know more about the product. But all this only matters if it truly leads to their financials growing, mainly through their customer count and revenue growth reported at their next few earnings. Of course, that's what makes it official. That's the scoreboard to follow. But what are your thoughts, though, on the reaffirmation from Wedbush, as well as how you look at Palantir de-risking itself over time? Let me know below, and thank you all and my channel members, and I'll see you in the next video.